First management on the show, that's HealthCare Global Enterprises. They strengthened their dominance in the cancer care by buying 51% stake in Vizag-based cancer hospital, Mahatma Gandhi Cancer Hospital. Mr. Ajai Kumar, the Executive Chairman at HealthCare Global Enterprises, joins us on the show. Hi, good morning, sir. Thanks a lot for joining in. Well, I'm looking at the financial. It appears you've done a rather good deal. The enterprise value of close to around 400 crores. And it does an EBITDA of close to around 40 crores. So it's a good deal struck at around 10 times EV per EBITDA. How do you fund this transaction? And what does this take your total debt to? I think the last counted number was around 350 crores.
Yeah, for us, we are doing it in two tranches. Initially, the 200 crore, what we are going to do will be internal accruals in some debt. But we have 18 months period to do the rest of the fund to reach 85% stake in the system with a partner. So that we have time to see, we may even do some primary at that point. A combination of two, what we are looking at to reach our 85%. So we are very comfortable with this. And when we calculate our debt to EBITDA ratio and all, it will be very much in a comfortable margin. So we feel, this is accretive for our EBITDA margin, is accretive for our RoCE. So overall, and most important thing is we are getting a very good partner in Murali, who has quite a good reputation in Vizag. And with our Vizag center being there already, we will be in a very dominant position in that part of the country.
You want to give us some numbers, Dr. Kumar? 350 crores is what it'll come to for that 85% approximately. Yes. How much of that will be debt? Could you give us that number? And also, on an average, this acquired entity is doing around 120 crores of revenues. Where do you see it scaling up to, say, in the next 2 years or so?
I think the growth will be in the region of 15%. And with the dominance what we are having with our center, it can even exceed that. And as far as the debt and equity is concerned, as I said, most of it's quite possible the 200 crores will be from the debt and internal accrual, but the rest will probably come from primary, which we have to take a call in 18 months.
Okay. Mr. Ajai Kumar, hi, good morning. Your operational improvement is something that the street has really liked. I mean, your margins have been the best in the last 6 quarters. Just wanted to know from you, is there scope to build on to these margins? If yes, what are you looking at? What are the triggers for further operational improvement?
I think we have a very good foundation now. We kind of went through the 3 years in the 20, 21, 22. Now we have consolidated, and with that, what we look at is our mature centers, as we know, are performing excellent. Our issue has been in our new centers, but they are all taking shape. And with that, we expect in the next 2 to 3 years, our operational margin to increase significantly, over 20%, as well as our RoCE will increase significantly in the next few years. So all the fundamentals are in place, and with this acquisition, it is only going to add to this value. That is why we feel we will continue to be dominant. We will look at more of this kind of acquisition, and also we will certainly look at some of the brownfields, and maybe like in a city like Bangalore, we are doing centers in Whitefield and in North Bangalore. Those will be our strategy to see how we can scale it up in the dominant cities. We are, for example, in Ahmedabad, we doubled our bed strength now. We have opened the new center. This will be our way forward as we move forward.
Okay, so you said 20% margins is what you're looking at over the next couple of years. What does this do for your market share? Because in Bangalore, which is your home market, you have 30% market share currently, right?
No, we have more than 30%. And we expect...
Sorry, I didn't get the number. What is the market share right now?
Now, we are at about 34% now. 34%. And we expect to reach close to 40% with our 2 new centers coming. And we will be in quite a dominant position here in Bangalore, so also in Ahmedabad.
Right. Mr. Ajai Kumar, hi, good morning. So while you go out and acquire companies, there is an M&A within the company which is waiting to get closed, right? That stake sale, which has to come through.
We don't know, and I can.
You're laughing, but let me ask you this pointedly. What we understand is it was supposed to close by the end of June. It's of course 1st of July now. So Are we very, very near? Is it a matter of weeks? I mean, you would have a sense. I'm not asking you for who's the buyer, but is it a matter of a week, 2 weeks?
I can tell you one thing. As a founder, I'm very happy with CVC. I will continue to work with CVC. And when the time comes, if there is any change, I will look at it certainly. At this point, as far as I'm concerned, CVC is our partner. And as you can see, this M&A has happened without any disturbance. These things will continue to happen with CVC as our partners.
No, so are you saying they're not, I mean, it's off? The transaction is off? Because you told us in so many...
All I'm saying is, it is for you to ask CVC. For us, as HCG growth, nothing has come in our way and will continue to grow.
Because, in our previous interactions, you've told us that you kind of confirmed that this is on the annual, this is happening, and you'd prefer a financial partner rather than a hospital company coming in, right? You've said that much.
No, what I said was, whenever it happens, obviously at some point CVC will try to exit. Whenever it happens, I would prefer the right partner with whom I will be willing to work. And I have a lot of for financial partners, everything else. We have done very well in the last 20 years with several financial partners. We continue to drive that. For us, the important thing is medical excellence and growth. And I'm
absolutely.
Sure
Could you again? We'll ask CVC. We've been asking CVC, but again, is it very? You'll have a sense, right? I mean, is it very close? Because it'll get done, and then we'll move on.
Honestly, I don't have a sense. Okay.
Okay.
So I would leave it at that. Honestly, I don't. And I think that the conversations I have with CVC have been very productive. They're very supportive in our board meetings, and we'll continue to move forward.
We'll have to wait for that transaction last
Just one thing, Mr. Ajay Kumar, while you were doing this acquisition, the CVC did not tell you, wait 2 months, let the new guy weigh in on this. They didn't say that.
Yeah, that is exactly my point. We worked with CVC closely, and they were quite involved in closing the transaction. So there was no waiting period. We really did smoothly and executed it.
Oh, let's focus then on the transaction. 85% you've accounted for, 51% and then the 34%. What about the remaining 15%? When do you go ahead and acquire that, and at what valuation?
See, we like the valuation for the 85% will be the same as now.
Yes. Yes.
The 15% we would like to have the partner keep it, because our model of HCG has always been partner model. And this is why HCG has grown very well. And we hope Dr. Murali Krishna will stay with us for a long time as 15% partner.
Got it. Okay. And also you said that 15% is the growth you're looking at. That will be the ARPOB growth, or occupancy goes up? How do you look at that? What is the current occupancy?
The current occupancy is there over about 65%. And he is very good. And the number of, as you know, in oncology, it's also the footfall more than occupancy. All of that has been very well. And the growth, when I talk about, is the revenue growth.
Okay, the revenue growth. You also said you're looking to take your market share in Bangalore from 34% to 40%. So I want to understand what does this do to your ARPOB? Because the ARPOB currently is almost at 43,000. What kind of growth are you looking at there?
See, Bangalore ARPOB is very high, and that will continue to grow. We expect Bangalore ARPOB to be in the 70,000s, and maybe it will stabilize at that point with so many things happening. And what is the upside you can get in ARPOB? In a big city like Bangalore, as you know, some of these already companies are already giving around 70, 75. That is where we will be. In terms of the overall, we expect it to be over for close to 50,000 coming in the next few years. And it can even exceed that. It all depends on how we execute it, how we drive, how the growth will. And the most important thing in ARPOB is the mix. What is the mix between various entities which are giving us this ARPOB?
Okay, we will leave it at that. Thanks a lot for joining in. Appreciate your time here on CNBC-TV18. That's HCG. The stock is up about 20% in the last 1 year. And the management is very confident. Growth will be about 15% going forward. They talk about how the market share in the Bangalore market is almost 34%, and they plan to take it up to 40%. Let's do one thing. We have